everyone. Myself Nayaz Pasha, a practicing chartered accountant. Today, this session I'll be taking up with the issue of the option given under the Income Tax Act, whether to go for the old income tax rate, what existed prior to this financial year, or the new rates, what have been put in this financial year. The last budget, what we had, the budget of the 2020, where the tax rates would be specified for financial year 2021, it gave an option for the taxpayers to opt out of two income tax rates. The two income tax rates, whatever given, I think is the first time this has happened in the history of income tax where for a general taxpayers, the law gives an option of two income tax rates. And they say either choose of this rate, rate A or rate B, and you decide what rate you opt for, and accordingly discharge your taxes. The table, what you are seeing here, the table, what you see, it's basically the comparison of the old tax rates and new tax slabs, whatever provided in the budget. Those who are novice income tax, I'll just spend about 3 minutes on this. And those who are good with income tax, I hope they understand how these taxes are calculated. We have slab rates for individuals. If you look at the old slab rates, up to 2.5 lakhs, it is nil. Let me clarify, in income tax, there's no exemption up to 5 lakh rupees. Going by law, up to 2.5 lakhs, income is exempted. Whatever differential or in excess of 2.5 lakhs up to 5 lakhs, we calculate tax at the rate of 5%. Anything 5 to 10 lakhs, 20%. More than 20 lakhs, more than 10 lakhs, we apply 30% income tax rate. This rate, what was there up to financial year 1920, still continues. Now, government has given an alternative rate in the law where they say, like, you can opt for these rates. Different 7 slabs have been made up. Again, first 2.5 lakhs, no tax. 2.5 to 5 lakhs for the differential amount, we apply 5%. Likewise, 5 to 7.5 lakhs, we apply 15%. 7.5 to 10, we apply 10%. 10 to 12.5, we apply 20%. 12.5 to 15, 25. More than 15, we apply 30%. To illustrate this, how these tax rates are applied, the so-called incremental or progressive tax rates. When we look onto the next part, I have just illustrated, considering if you see on the left-hand side, the income what I have taken up is 16 lakh rupees. Considering an individual is having 16 lakh rupees of income, how do we apply these tax rates? Under the old system, up to 2.5 lakhs do not calculate any tax. So 2.5 to 5 lakh rupees, you find out the difference, the 2.5 lakh rupees, you apply 5% on that, which comes to 12,500. 5 to 10 lakhs, you apply 20% of the differential 5 lakhs, 1 lakh, and anything above 10 lakhs. Now you look back here again, I'm saying about the income of 16 lakh rupees, about 10 lakh is 30%. So you apply 30% on that 1,80,000. You sum up all this. This is the income tax payable, excluding the cess of 2,90,000. Excluding the cess, you pay income tax of 292,500. You look on the other side, the new slab rate, where there are 7 different slabs. On the same principles, taxes are calculated. First 2.5 nothing, 2.5 to 5 amount remains same between old slab and the new slab. As far as 5 to 10, what is there in the old rate, it's broken up to 2 subcomponents in new rates. 5 to 7.5, you apply 10%. So 5 lakhs to 7.5, what you see, 2.5 lakh rupees of tax, you apply 10% on that. That gives 25,000 rupees. 7.5 to 10 lakh rupees, you apply 15%, 37,500. Likewise goes on. The last line above 15 lakhs, 30%, you apply 30,000. So when you see income of 16 lakh rupees, more than 15 lakhs is only 1 lakh. You apply 30% on that and you get a tax of 30,000. You sum up all this, 22,17,500. Looking at this, you jump to a conclusion. New rates are better. But every relief under taxation always comes with riders, always comes with conditions. I've highlighted their conditions apply. So do not jump to a conclusion just comparing your net taxable income with old rates and new rates to decide what is beneficial for you. Please have a look at the riders which comes with opting for new rates. For old rates, whatever law that riders that contain prior to financial year or up to financial year 1920 continues. For new tax rates, if you opt for, there are some riders which you should be taking care of. If you are an employee, house rent allowance you have to forego, leave travel allowance or exemption you have to forego, children education allowance, hostel expenditure allowance, uniform allowance, all these allowances where exemption was provided in the law, all these you have to forego if you want to opt for new rates. Every employee, irrespective of his quantum of salary, is given a 50,000 standard deduction to meet his regular employment expenditure, irrespective of whether he spends this or not. It's a flat expenditure given for all the employees. You opt for new rate, this 50,000 is not permitted to be claimed. There's also professional tax, which is also a statutory tax paid by employees to the state government. That is also not permitted to be claimed as deduction from your salary. So first three parts precisely meant only for the salaried employees. The other parts applicable for all taxpayers, including salaried employee. We have something called as Chapter 6A in income tax, which provides certain tax relief or tax rebates on certain savings, on certain expenditures. All those have to be foregone, except for two sections. I'm not going to those two sections in detail. Basically, pension and some employment. Not very rarely it's applicable to the individuals. Second prominent one, if at all you have taken a housing loan for your own house, self-occupied house, the interest what you pay on that housing loan, there's a 2 lakh rupees deduction given against your other incomes that has to be sacrificed. All these exemptions. So simply saying law says you want to opt for new rates, forget all these exemptions. You're not permitted to claim all these exemptions, sacrifice all these exemptions and deductions. You continue with old rate, you are eligible to claim all these exemptions or deductions. Just briefly running through what is this chapter 6A, because in my further slides I'll be referring these sections. I'll just spend a moment on giving a brief insight of all this, mostly the prominent ones which individuals claim. You have something called as ATC, all these PF contributions, life insurance premium, tuition fee of children, housing loan principal repayment up to 1.5 lakh rupees is permitted to be claimed as deduction. If you have taken medical insurance premium, this can go up to 25,000 depending on the amount what you pay. If you have any disabled person, or if you're spending some money on the specified diseases, you get deduction under 80D, 80DDB. If you have taken loan for your education or your children education, you are paying interest on that education, you get tax rebate for it or tax deduction for it. Donations including Prime Minister National Relief Fund, off late, what this PM case fund, all these contributions, whatever you make that get covered under 80G. If you're having savings bank interest, you get a deduction of 10,000 on your savings bank interest. And if you're senior citizen, you have fixed deposit, you get 50,000 deduction from your interest. All these are the breakup of the last but one, what I say, all deductions under chapter 6A are to be foregone. The object of giving these clarifications on these deductions are, because in my further slides, instead of specifying all this content, I'll be using these section numbers. So I thought this would be good if I clarify what these sections are so that you have a better understanding of what we do. Now, going back to our previous slides, comparing these old and new rates, looking with these riders, now you have to take a call as a taxpayer what you have to or what you will opt for. Before going to the next slide, let me put across some harsh facts. In India, 5.52 crores individuals file income tax return. Total individuals I'm talking about. In fact, all taxpayers are only 5.97 crores. Companies, HUF, partnership firm, everything. Individuals are 5.52 crores. Out of this 5.52 crores, you will be surprised 4.97 crore individuals declare income less than 10 lakhs. So the balance, whatever you have, about 55 lakhs, are the only individuals who are declaring income more than 10 lakhs. Even if I further cut these figures, between 10 to 15 lakhs, there are 32 lakhs individuals. The numbers, what I told, 4.97 crores up to 10 lakhs. If I add up another slab of 10 to 15 lakhs individuals, which comes to 30 lakh rupees, this gives about 5.27 crores. So you are left with only 25 lakhs individuals who are filing income tax return more than 15 lakhs. Why I'm saying these figures? This deciding between old rates and new rates, this applies predominantly for those individuals whose income is in the range of 5 to 15 lakh rupees. In that, again, predominantly between 5 to 10 lakh rupees. So these are the taxpayers who gets more affected deciding between whether they should opt for old rates and new rates. One more harsh facts I just like to add as a statistics. Whatever figures I'm telling, this is for assessment year 2018-19, published by the Government of India, Income Tax Department. This 4.97 crores individuals, what I told, who are filing less than 10 lakh rupees of income, average income tax per person comes to only 12,000 rupees. 12,300 rupees precisely. So in India, 4.97 crores people filing less than 10 lakh rupees of income, the average tax collection from them comes only 12,300. These numbers are relevant over here because this session or this video session, whatever we are taking up, this predominantly tries to address this category of 4.97 crore people, where for them it is more relevant for opting between new rates and old rates. Above 15 lakh rupees, lot of considerations are there for them. This is not so much relevant because they already have this committed savings, all this. For them, it doesn't make much impact. Only for these people, it makes impact. I did some research, some studies, some papers I looked in, all the published materials, all this I checked in, and finally I arrived at some numbers or some groupings based on which whether a person should opt for the new rate or continue with the old rate. Based on the research, what I have done, the numbers, what I took, all these different permutations, combination, try to pick out the major population of the taxpayers who regularly have what kind of deductions. So what I see is majority of the individuals who are filing these returns up to 15 lakh rupees, they have this ATC, which is specified savings in life insurance, school tuition fee, medical insurance, education loan, housing loan. Most of these individual taxpayers have these deductions or tax savings. Giving my understanding, I have divided these taxpayers into two parts: salaried employees and non-salaried employees. Why this is relevant? Because for salaried employees, there is a deduction of 50,000 standard deduction given, which is not available to any other person who is not a salaried employee. So I have to, the numbers will vary. I have to classify these taxpayers between what if he is a salaried employee, what if he is not a salaried employee. Why I picked out again salaried employee predominantly? Because the 4.97 crores, what I told, declaring less than 10 lakh rupees, out of the 2.5 crores are only salaried individuals. So they form major chunk of these taxpayers up to 10 lakh rupees. So keeping all this in background, I filtered out this application of the tax rates between old and new rate, classifying the taxpayers into the salaried employees and non-salaried employees. Now, if we look at this screen, what is being displayed, if you're a salaried employee, first thing I write, irrespective of your quantum of salary, do not bother what is the salary that you are drawing. Whether you're drawing 50 lakh rupees, you're drawing 10 lakh rupees. If you satisfy either of A, B, C, D, any one, if you are satisfying, for you, old rate would be beneficial. New rate will not be beneficial. You can try out these numbers. Those who are having a decent knowledge with the income tax, you can try out these numbers, whatever this I have done. Because this took a lot of research to arrive at this permutation combinations. When I say either, any one you satisfy of this A, B, C, D, done. Don't bother with your salary, continue with the old rates. Do not opt for new rate. It will be detrimental for you, you'll end up paying more taxes. What are these? When I say HL, housing loan EMI, ATC, what I told about specified savings, ATD, insurance premium, ATE, interest on education loan, all put together. If you already are having commitment of 2 lakh rupees, then do not opt for the new rate. Done, you are beneficial in old rate. In fact, many a times it is indifferential point. Or when I say first one, when I say housing loan EMI, the common sense is if you have a housing loan, you don't pay rent. You are staying in one house. When I come to the second part, rent, if you are paying 15% of salary, even if you don't have ATC, ATD, ATE, ATG, nothing you have, no housing loan. See what is the rent you are paying, compare with your salary. If the rent what you are paying is more than 15% of salary, stick to the old rate. Do not opt for new rate. Continue with the old rate. Third option, if at all your rent is around 10% and you save 80,000 rupees on this ATC, ATD all put together. When I say all these sections, it can be medical insurance premium, it can be interest on education loan, it can be ATG donations, it can be ATC, all add up. If you can reach 80,000 rupees and if you are paying 10% rent of your salary, done. You are good with the old rate. Last one, you have ATC, ATD, AT all put together around 75K or more. And if you have dependent disabled person in your family, you are taking care, where you have this section 80DDP and where you get a deduction of 75,000 or 1.25 lakhs depending on the percentage of disability. If you just have an handicap dependent on you, who is dependent on your income, and if you could put across this ATC, ATD all put together 75,000, done, you are good with old rates. So in this salaried employee, the first category, what I say, do not bother to look what is the salary at all. Either of these tests, if you satisfy, do not opt for the new rate, continue with the old rate. The second main category, if you're a person having salary of less than 6 lakhs, gross salary of less than 6 lakh rupees or 50,000 per month, continue with old rates. Because you don't have the leverage of standard deduction of 50,000 under the new rates. Old rates you continue if your annual salary is less than 6 lakhs. This is considering you don't pay rent, you don't have savings, nothing you have. You are just having a gross salary of 50,000 rupees without any rent, without any savings. Do not opt for new rate. Stick to the old rate only. Third category, what I say, if your salary is more than 6 lakh but less than 12 lakh, I specify this category. And if you are paying 12% of salary on all this put together, housing loan EMI, ATC, ATD, ATE, ATG, or if you have disabled dependent. When I say or, let me clarify, this 12% of all this is one side, dependent is one side. If you have just a handicap or disabled dependent, up to 12 lakh rupees, old rate is good for you. If you don't have disabled dependent, you just try to save an amount of 12% of your salary, depending on the salary. If you are 8 lakh rupees salary, 8 lakhs, 12%, 96,000 keep aside for all the specified savings. If you have 10 lakh rupees salary, keep aside 2 lakh rupees for ATC, ATD, ATE, ATG, all even housing loan interest. You reach this much enough. For 10 lakh rupees, 1 lakh 20,000, sorry sir, 10 lakh rupees ka 1 lakh 20,000. You reach 12% of your salary in specified savings. As long as you are in a salary bracket between 6 lakh to 12 lakh rupees, you are still beneficial under the old rates of income tax. All these cases, based on the numbers, whatever coming out, based on all the permutations, combinations that we have worked out, for a salaried employee in all these scenario, anywhere you fit in, stick to the old income tax rates only. What if you don't have salary income, or you're not an employee, you're carrying one business, your house property income, you have only interest income, you have capital gains, so you're not having any salary income at all. In that case, you have to somehow work out 15% of your annual income in specified savings or 2.5 lakh rupees, whichever is less. So if you're having income of 10 lakh rupees, keep aside 1.5 lakh rupees. Or if your spending is more than 1.5 lakhs on interest on housing loan, medical insurance, all these ATC savings, which includes life insurance, school tuition fee, NSC, all this put together, ATE, interest on education loan, all this, if you can reach 15% of your income, you are still better under the old rate. Do not opt to the new rate. Or you reach 2.5 lakh rupees, enough, all put together. Say if your income is 20 lakh rupees, 15% will give you about 2.25. Yes, you have to save, sorry, 3 lakh rupees. Yes, you have to save 3 lakh rupees or 2.5, whichever is lesser, save only 2.5 lakh. That would be good enough. Or by chance, if you have a disabled dependent, you say that 15% becomes 10%. The specified savings, what I'm insisting on 15%, if at all you have disabled dependent, limit that savings to 10%, good enough. If you have more, fine. But that should be the minimum benchmark what you reach, wherein you continue with the old rates, that would be beneficial for you. As on date, a person who is more than 30 years or 35 years, already he would have committed to these specified savings. Particularly salaried class, I doubt if anyone has not opted in the specified savings who is into at least more than 30s. Less than 30s, yes, people take chances. Remember, any company you join, you'll always have this compulsory PF, which on the lower side also 21,600 per annum it comes to. So that's always ATC savings. So you have an inherent ATC savings of 21,600 in your employment. You might be taking your life insurance premium, all this. So you sit, whether you're a salaried employee or not a salaried employee, you have a look at your already committed savings. You have your children, you are paying them school tuition fee or college education fee. You already have committed life insurance premium. You already have medical insurance premium. You already have PF from your employer, or you your own paying some PPF account. Look at all these things. If at all this is reaching, already you have 15% of this amount of savings compared to your income. Do not opt for new rate. You will end up paying more taxes in new rate as compared to the old rate. Having said all these negative attributes about new rates, now the next question comes, is new rate not beneficial to anyone? Then what is the purpose? Why is the government bought in these new rates? Yes, it is beneficial. There are some category of taxpayers for whom these new rates are beneficial. If you are not a salaried employee, if your income is more than 5 lakhs, for salary 6 lakhs. So up to 6 lakhs salaried people be in old rate only. Others up to 5 lakhs. So if your income is more than 5 lakhs or 6 lakhs, you don't have any savings. You are a bindas person, spending money, earning money, spending money. You don't have any habit of savings at all. Then for you, new rate is beneficial. Remember, when you are planning, particularly salaried employees, you should take a decision in the first 2 months itself. Now, in fact, today, many of the employers are asking the declaration from their employees as to what rate they have to stick or they are opting for in this coming financial year. So you have to plan this coming financial year. Are there any children who will be enrolled? Are there any children who will be enrolled into the school this year? Are you planning to take any life insurance premium? Are you planning to shift to a rented house somewhere? Are you planning to go to a bigger house? Are you planning to take housing loan? Please keep all this into consideration that may happen in this financial year. Then decide for the rate of tax what you need to opt for. Unfortunately, for all salaried employees, they have to decide within first 2 months of the financial year itself. And the law has given the right of saying that once you opt for it, it is deemed to have understood every year it applies, but you can opt out anytime. That option again you have to exercise. So you should be careful when you are deciding to opt. Once you opt for that financial year, no question of backing out. Later you make some savings, you come back to your employer, you say impossible. It's not possible to retract the option what you do. So please have these considerations of what already committed savings you have, what you plan to have in next financial year, accordingly exercise your option. Going further, who are the others who are beneficial? If your annual salary is less than more than 6 lakh but less than 12 lakhs, where you don't pay your specified savings, which is 12%, that is The B1 reverse of that. The other side of the B1 is what over here. Same thing, the other side of B2 is what this C over here. So when your specified savings are not reaching up to that so-called benchmark of 15% or 10%, what I have said in that B1 and B2, for you, this is beneficial. Summing up all this, the simple calculation, irrespective of whatever category of person you are earning the income, whatever types of or source of income you have, just take a benchmark of 15%. See whether your all specified savings, including housing loan EMI, life insurance premium, children's school tuition fee, PF, all this put together, if it is reaching 15% of your income, you'll always be better off under the old rate, between 12 to 15%. If not, then you opt for the new rate. Again, be careful before opting for new rate because you cannot retract. Before going to the illustration part, I'll come back to the illustration part later. Again, as I told, we have done a lot of workings on arriving at these numbers, whatever I told you. If you ask as a professional, my personal opinion, you are a person, new rate applicable for whom you are a person earning more than 6 lakhs or 5 lakhs, do not have any savings at all. I suggest opt for savings. Opt for savings, at least your between 12 to 15% of your income. Simplest way, go and open a 5-year tax savings fixed deposit. It will always create a security. Take a medical insurance premium where you pay at least 2% of your annual income as premium. You are seeing today's economic scenarios, the crisis what we are facing. Next 2-3 months, this is going to worsen. And most of the employees or most of the taxpayers who don't have specified or don't have savings made as on this day are facing the consequences. So depending on the level of your income, you're a person earning 1 crore per annum, at least make 10 lakh rupees savings in all this. As time goes by, once any uncertainty kicks in, this kind of lockdown kicks in, where you're not having any source of income, no business, even rentals also may not come up. In all these cases, these kind of funds will help you. So I personally suggest, irrespective of whatever level of income you are earning, depending on the category of income you are earning, you're earning 20 lakhs, save 2 lakhs per annum, 2 to 2.5 lakhs. You're earning 50 lakhs, save 5 to 6 lakhs per annum. Keep aside, preferably in these tax saving schemes, one hand you'll save taxes, you continue in old rates. On the other hand, you have the funds with you only. You have the social security with you. You have this medical coverage risk with you. My personal opinion, if you are not committed to any kind of savings, having income more than 6 lakh rupees, that is the previous slide what I said, please opt for some savings in the range of 10 to 12% of your annual income and continue with the old rates. You will save taxes in the old rates. Parallelly, you will have the social security or savings with you of the savings what you have made now. This slide will be shared to you. This I have just worked out some, whatever this I told, that we did some lot of research on arriving on all these numbers. How these numbers are, what is this parameter that we have worked out over here. So just as a sample illustration to test these parameters, I have taken these scenarios. Gross salary for different levels, 6 lakh, 7 lakh, 8 lakh, 9 lakh, 10 lakhs. Now heading, if you read, if rent paid, exemption of HRA is calculated with presumption that we are paying 20%, even 15% you pay good enough. And your basic plus DA is 50% of the gross pay. Considering this parameter, you will get a HRA exemption of that specified amounts. For 7 lakhs, you will get 1,05,000. For 8 lakhs, you will get 1,20,000. Provident fund, I told you, most of the companies have this compulsory provident fund. You will have this automatic savings in your PF account. You will get standard deduction irrespective of your salary. Most of the states you will pay professional tax if your income is more than 50,000 per month. Salary is more than 50,000 per month. Now I arrive at something called as taxable income after deducting. If I talk about the first slab of income, 6 lakh minus 90,000, 21,600, 50,000, all together 4 lakh 36,000. Under new tax regime, you will pay income tax of 23,500. Please remember, this new tax is calculated on A, first row, no deductions, nothing. Whereas old tax is calculated on B, the so-called taxable income, no tax. You look at all the columns. As I told you before, you are paying rent of at least 15% per annum, no savings. If you look at over here, I have not taken any ATC savings except for the PF. All the cases beneficial. Your old rates are beneficial when compared to new rates. Now, I took even for the scenarios who will get benefited with this. An employee who will get benefited, he is not paying rent. I take illustration where no rent paid at all, but still I have taken the PF. Excepting for the 6 lakh criteria, all other cases, you will end up paying taxes more than the old rate. So you're paying taxes more under the old rate if you don't have HRA paid and if you don't have any ATC savings. This add to my personal recommendation what I told. If you're fitting in any of these slides what has been displayed to you, please follow this. My personal opinion, once you stick to this slide will not hold it. Hope I have clarified or I have given you information on this option what you can exercise. Still, if you have any doubts or anything you want to take up, you can send the doubts. We'll try to clarify either now itself, or you can talk, or you can later part of time we'll clarify whatever doubts you have. You can take up the doubts or queries whatever you have. And you can post your queries, guys. You can read, have a look at this video. Anywhere you are stuck with or you don't have a clarity on this, you can post your comments over here. We will be replying as soon as possible for your queries. Thank you very much. Have a good day.